Welcome back, everyone. Ready to dive into another fascinating nugget of financial wisdom.
Always up for a challenge.
Today, we're tackling a piece of advice that honestly, when I first saw it, I was like, huh.
Haha. Yeah, I had the same reaction.
So the advice we got from a listener this week is, buy on red, you are dead. Buy on green, you are free.
Pretty dramatic, right?
Yeah, and what does it even really mean?
All right. Where do we even begin to unpack that?
Okay, so obviously, anyone who's ever even glanced at a stock chart or, anything financial knows red and green are pretty universal symbols, right?
Yeah, definitely.
Red, bad.
Yeah.
Green, good.
Yeah, red usually, signals some sort of decline in value. It could be for a single stock. It could be, the whole market.
A bad day on Wall Street. Everything's flashing red.
Exactly, yeah. And then on the flip side, green represents growth. All those nice positive numbers in your portfolio.
That's what we like to see.
Yeah, absolutely.
But okay, so this advice is basically saying, avoid buying when things are down, right?
Yeah, on the surface, it kind of seems that way, right?
Which, feels kind of counterintuitive to the whole, buy low, sell high thing.
Right, yeah. That's the classic advice, isn't it? You
Uh-huh.
buy when everyone else is scared and prices are low, and then you reap the rewards when things turn around.
So how do we make sense of this buy on red, you are dead thing?
I think it's a good reminder that, investing is never that straightforward.
Right.
Just because a stock's price is down doesn't necessarily mean it's a bargain.
So, how do we know when red is a genuine warning sign and when it's, an opportunity?
Yeah, good question. So think of it this way. Sometimes a stock price drops because there's something genuinely wrong with the company.
Okay.
Their earnings are tanking, their product is failing, they've got some bad press, whatever it is.
The whole market's down.
Right, exactly. And so, in that case, jumping in just because the price is lower could actually be a big mistake. You're catching a falling knife.
Ouch, yeah.
Yeah, but on the other hand, there are times when, that same red could actually signal an amazing opportunity.
So, same color, totally different situations.
Exactly. And it all comes down to understanding, what's driving that price movement.
Okay. Research. We got to do our homework.
Always. And, this actually ties into, a lot of what value investors do.
Okay, how so?
So they're specifically looking for companies that they believe are undervalued by the market.
So they're seeing red, but they're not running away.
Nope. They're seeing it as a potential buy signal.
So, those are the folks who are, poring over financial statements, reading every analyst report.
Yeah.
You're really getting into the nitty-gritty.
Exactly, because they want to understand, is this a company that has strong fundamentals, good management, a solid product or service, and is the market just, temporarily undervaluing them for some reason?
Got it. So red can be a warning sign or a treasure map, depending on the context.
Yeah.
Exactly. And you know what? The same logic actually applies to the other side of the coin, too. That buy on green, you are free. Part of the advice.
Oh, interesting. Okay, break that down for me.
Sure. So yeah, green might feel good. It might feel safe. You're seeing those positive returns. Your portfolio is growing.
Who doesn't love seeing green?
Exactly right. But just because a stock is going up doesn't automatically mean it's a smart buy.
Ooh, okay.
You could be buying at the peak right before a correction, or maybe the company's had a couple good quarters, but their long-term prospects aren't actually that great.
It's the market is irrational sometimes, or a lot of the time.
Exactly.
Think about the dot-com bubble. Everyone was so excited about, internet stocks. Prices were just skyrocketing and then crash.
Yeah, lots of people lost a lot of money.
So what's the takeaway here? I feel like this whole red and green thing, it's really highlighting how dangerous it is to rely on those super simple indicators.
Right. It is. It's a great reminder that, context is key.
Context is king.
Absolutely. Just looking at the color of a stock's performance, it's not enough.
Not enough.
You have to dig deeper, look at the fundamentals, understand the market trends.
Do your research.
Exactly. And maybe most importantly, know your own risk tolerance.
Know yourself.
Yeah, because what might be a good investment for one person might be a disaster for someone else.
Totally. So I guess the bottom line is successful investing, it's not about, blindly following catchy phrases or color codes or anything like that.
It's not.
It's about doing your homework, developing a sound strategy that aligns with your goals.
Yeah, and remembering that the financial world is always evolving.
Always changing, always learning.
Right. So stay curious, keep learning.
Seek out diverse perspectives.
Exactly.
So to wrap up today, I want to leave you with this question. How will you approach those red and green signals differently going forward?
Yeah, think about what we talked about today and remember, understanding the context behind those colors, that's the real key to, making informed financial decisions.
And potentially unlocking your financial freedom.
Exactly.
That's all for today's deep dive. See you next time.